Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, many baby boomers and retirees just like you are reaching out, trying to find out how they can avoid a tidal wave of coming taxes. And one of the greatest wealth destroyers is taxation, especially for having a front row seat and working with baby boomers and retirees now for over 24 years, having a focus of helping them transition from accumulation phase to distribution phase. And many of them are completely caught off guard by these tidal waves of taxation that hit them when sometimes it's too late. And I want to teach you that it's much easier to prevent these taxes coming than it is to undo them. And then add to the fact that we're facing one of the most contentious major political transitions of outcome of election that many of us will have never seen in our living years. And we may not see this extreme of a potential difference for the rest of our living years. So the time to get serious about protecting our money from a serious tidal wave of taxation on our money is in 2020. And I want to give you that opportunity to learn what many of your friends and neighbors have already been able to learn. And we're getting descriptors from many of you saying, Chuck, I'm getting killed. I'm getting hammered. I'm getting decimated from these taxes. And then we're hearing from that, so those are already transitioned over to the tax tidal wave, and they're trying to figure out a way to get out of the wave pool. But we've got a lot of you that are saying, I see what tax my parents are paying, or I can just see around the corner what taxes I'm going to be facing. And the harsh reality is, even if Trump gets reelected, folks, taxes are heading up. We've had so much stimulus to save the economy, right, from this COVID-19 craziness and chaos. Add to the fact that the Tax Cut and Jobs Act is eventually going to have to sunset. And we know Trump, as great of a negotiator as he is not going to negotiate a third term. So let me give you an example of Steve and Tina from North Carolina. Steve's in his middle 60s. Tina just turned 60. Steve's already retired. Tina would like to retire. And they're very fearful of this tidal wave of taxation because as well as predictably, boomers and retirees have saved. They've saved in these ticking tax time bombs that are ready to go off, and the tax just gets worse and worse and worse, folks. And that's even if tax rates don't go up. The fact is, indirectly, our tax rates do go up because where we have no other deductions, and now we're drawing money out of our IRAs and 401ks, it's forcing us to take a higher gross number up as the cost of living goes up to get the net needed number to sustain and maintain our lifestyle. And by default, taxes increase for retirees. Add to the fact that tax rates, capital gains, I could give you a litany of different taxes that are being proposed in the Biden camp that will blow your mind. And add that to the fact that the Tax Cut and Jobs Act, when it sunsets, everybody's brackets are going to condense and the tax rates are going to go higher regardless. So as Steve and Tina had shared, they said, we know taxes are going up. And we know with how much we've saved in our IRAs and 401ks, we're going to be in the highest tax bracket. And we don't want to give the IRS in the state of North Carolina our retirement income, right? We know we're paying excessive healthcare costs, which are only going to rise, which means we're going to have to take more out of these accounts to be able to cover that expense, as well as inflation with obviously this deficit and stimulus that we've dug ourselves into as a country. And taxes are the absolute issue, Chuck, that I believe in hearing you talk about week in and week out. And we want to preserve our savings before it gets depleted. Well, folks, here's what happens. This tidal wave of taxation, where you're forced to take a higher distribution, which forces you into a higher marginal bracket, which then triggers 85% of your Social Security being taxed, and even in some cases your Medicare to be taxed, it's a tax trap. But the good news is there's things you can do to get away from it. The sad part is these clients, like a lot of you that we see, had a brokerage account, non-IRA, and it was throwing off phantom income because the more volatile that trading is based on the volatility of the market, especially in an election year like this one, like we saw during the pandemic, like we saw in the fourth quarter of 18, these traditional retail fund managers are buying and selling and buying and selling, and it's throwing off short and long-term capital gains, which then forces you, without taking it as income, having to claim it as income on your tax return, which forces your marginal bracket and your taxes higher in that regard. Add to the fact, right, that they're very concerned about their kids and their grandkids with the new Secure Act of this inheritance tax where you have to liquidate, or your heirs have to liquidate the inherited IRAs, even Roth IRAs, believe it or not, in 10 years or less, and they don't want to leave a tax burden to their kids. So here's the good news. We were able to, in this particular case, Steve had a pension that didn't have a full survivor benefit. So we were able to create a tax-free survivor benefit surplus for Tina so that she doesn't have to worry about if she outlives, as most women outlive their husbands by 5 to 10 years. She doesn't have that financial concern about sustaining and maintaining her lifestyle, which Steve's very happy with that, especially if it works out in that order. Add to the fact that we also used in the Tax Cut and Jobs Act the ability for them to offset all of their capital gains on their rental property as well as their brokerage account, and zeroed out that tax. And we were able to do a Roth conversion using a very special feature in the Tax Cut and Jobs Act while we have Trump, to be able to do $400,000 from IRA to Roth and use the deduction to completely zero out the Roth conversion tax. We lowered their risk by 50% in their account savings in their brokerages, and we were able to reduce their risk, right? Increase the return by 50%, reduce the risk by 50%. Folks, go to retirementprotected.com. That's retirementprotected.com, and let us teach you what your friends and neighbors are learning. Avoid this tidal wave of crazy taxation that is around the corner, regardless of the outcome of the election. And don't subject losing your money to unnecessary taxes or corrections to the market in 2020. The time to take advantage of protecting yourself is now. It's a complimentary log on and learn educational webinar, and the time to act is now. Taxes are the greatest disruptor. To those of you that have saved $300,000 or more towards retirement, predominantly in tax deferred, you are the government's tax target, and you can protect yourself. Retirementprotected.com, retirementprotected.com.